Hey guys, Ben here. I always get asked what's one of the most important traits to look for when analysing a company. Well, that would be the company's competitive advantage or moat. So in this video, I'm going to reveal the top 8 competitive advantages or moats you guys need to look for when analysing a business. Because remember, when stock investing, we're actually investing into real businesses, not just numbers going up and down on a screen. These are real businesses with real management, real people providing real value to real people such as yourself. So before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you're a returning subscriber, welcome back. Feel free to hit that thumbs up. That really helps out a lot with the channel. And if you do want to access exactly which stocks I'm buying, which stocks I'm selling in real time and access my entire investment portfolio, then check out that first link in the description below for the VIP membership group. With that being said, let's dive in. Now for this video guys, I highly recommend grabbing a pen and paper, maybe making some notes on your computer, on your phone, wherever else it may be. And there's some valuable topics in this video, and it'll be essential for you guys if you really want to improve your skills as an investor to actually concentrate and watch this video the entire way through to the end. I know it's difficult, I know there's a lot of distractions going on these days, but trust me, this is one of the most valuable videos you need to watch. It's much more valuable than many of these videos you see on YouTube these days, which are basically just, this stock's going to 10x in one day. This is actually valuable information about how to spot a true business to invest into and actually compound your money over time. So diving straight into it here, we've got competitive advantage or economic moat. So imagine the company is a castle and this body of water around it is the company's economic moat, and you've got attackers here. This is competition trying to basically take the company's market share. So Warren Buffett, he's famous for discussing moats. It's one of his key investment criteria. So basically he says invest in businesses with durable competitive advantages. So you could say unique selling points, moats around the business. Look for consistent high returns on capital. However, be aware, high return businesses attract a lot of competition. So this is why we need a moat. So we need a moat, a barrier to entry from other competition. Basically, you've got to ask yourself, what is stopping another company from copying this company entirely in terms of its business model and doing the exact same thing? So widening the company's moat should be a primary business objective, and investment is most intelligent when it's the most business-like. So that's just some words of wisdom for you guys. So here's a quote by Warren Buffett on competitive advantages. So a good business is like a strong castle with a deep moat around it. I want sharks in the moat. I want it untouchable. So that's what we're looking for when we're looking for a business. And in terms of quantifying this, no formula in finance tells you that the moat is 28 feet wide and 16 feet deep. That's what drives academics crazy. They can compute standard deviations and betas, but they can't understand moats. Investing is an art. It's not a science. Although there are scientific aspects we can take from it, it is an art. So here's just an example here of a moat again, and I'll get into my top 8 moats. That should say 8 there. So I'll get into my top 8 moats. The first is a strong brand. Now this may seem obvious, but Warren Buffett calls this a share of mind principle. So basically when you think of certain brands, what comes to your mind? So let's play a little game. If I say to you, video streaming service, what company comes to your mind? Most likely Netflix. If I say to you the best designed cell phones, the best designed technology, you're probably going to come up with Apple, let's say. If I say electric vehicles, most likely you're going to say Tesla. So everybody has a psychological connection called the share of mind principle with these companies, and that is actually a competitive advantage. Okay, so the second competitive advantage is patents or proprietary technology. So patent protection on technology, processes, concepts. So some companies specialize in collecting patents and then sue other companies. So these are called patent trolls. I did a video on one of these a while back. There was a small cap 5G company. They basically have so many patents and they sued Apple, and they actually won a massive bet, I think a few $100 million from Apple, from suing Apple for their patents. So patents are valuable aspects of a business. So companies may have developed a unique and very complex software which they can also license to other people. So Microsoft during the late 90s acquired many smaller companies' technology. So this can be very, very powerful stuff. There's some risks with patents though, because I think patents were a lot better, say 20, 30 years ago, but there are many risks. Now, first risk is China. Now, let's just be real. I'm a very practical guy and I try to give you guys practical advice. I don't just give you theory that doesn't work in the real world. The real world is China doesn't care about patents. China doesn't care about intellectual property. Now, governments do push back on this in terms of China, but China just does what it wants. That's just a fact of life. They will copy every single technology that is produced no matter where it is in the world. So patent protection doesn't protect you in the Far East. Patents also require a lot of research and investigation in order to find if somebody is actually breaking your patent, and also to actually develop the patent originally. There can be costly fees to actually file patents for the company, and also costly court and legal fees to defend and investigate patent infringements.
Oh good, my laundry is done.
You see, Lisa, they don't need my testimony.
Only because Mayor Quimby's buying his nephew's freedom.
The system works.
So patents can also be geographical. So you could have some that's just based in Europe, some also in the US. And then patents can expire. So the pharmaceutical industry tends to have patents on certain drugs for, let's say, 20 years. And during that time, it's great for the pharmaceutical company, and they can actually have really high prices on some pharmaceutical products, which obviously is morally not right, but it's just what these companies do. So they can have these really high prices on these pharmaceutical products, but then once their patent expired, a lot of new competitors can come into the market and basically flood the market, decrease the company's margins, who they're competing against. So that's a risk with patents. And through each of these competitive advantages, I'm going to be giving you the competitive advantage and then also some of the risks. So companies with the most patents. So surprisingly, I saw here IBM was number one with 9,130 patents. Now, IBM stock has took a major plummet recently. The company's going through a lot of problems. I actually don't think it's a great company. There's a major short seller report on it. They are working on quantum computing, so potential advantage there. So Microsoft also has a lot of patents. So they have nearly 3,000 patents. You have Taiwan Semiconductor Manufacturing, very unique company, great company to potentially invest into. You've got Apple, you've got Qualcomm. They're involved in chips in the 5G space. You've got Amazon, Google, many other companies on here. Nano Dimension, that's an interesting one. I always get questions about Nano Dimension. So they have a patent for basically 3D printing circuit boards. This could be a game-changing technology for the company. So that could definitely be an interesting company to watch, but the valuation on that company is extremely high right now. Next I put as a sub-point is proprietary technology and unique processes. So my personal opinion is that some patents are overrated. Cost to file, defend, time scales, etc. Whereas unique processes built up in time can be copied, but this is very difficult. So Tesla's manufacturing process, they have multiple small incremental efficiencies which can compound over time and improve the company's margins over time. Tesla also has the most number of vehicles on the road right now with self-driving software. So that basically means this company is collecting a vast amount of data, and that should put it miles ahead of their competitors when it comes to developing a fully automated vehicle. So that's another competitive advantage for Tesla. However, Tesla did have some source code stolen, then taken to competitor Xpeng, allegedly. So that's just something to watch out for. So maybe their moat has been breached when it comes to self-driving software, at least during that period. Anyway, so with vehicles on the road for Tesla, over 730,000 Tesla Autopilot hardware 2 and 3 vehicles are out in the world. So they're collecting that vast amount of data. Former Tesla employee admits uploading Autopilot source code to his iCloud. So Tesla believes he stole company trade secrets and took them to Chinese startup Xpeng or Xiaopeng, however you want to say it. Very, very interesting. Xiaopeng's copied basically Tesla's whole business model in China. So it wouldn't surprise me if they also copied their self-driving software. Now, Tesla was also awarded a patent for the gigapresses. Basically, the system describes 4 gigapresses arranged in a plus shape that could work to stamp out an entire vehicle frame in one go. So that's a real manufacturing efficiency there. Other companies just couldn't compete with that. Competitive advantage number 3 is efficient scale or economies of scale. So if a company gets so large that it basically has the most amount of market share, then it could have a major competitive advantage in terms of economies of scale. It could basically just be too big to compete with. So example of this could be Amazon. So would you like to compete with Amazon in general online delivery? The closest competitor to Amazon really is eBay, and who uses eBay these days? It's just so long, it's so time consuming, bidding on stuff. eBay's not that great at the moment. Could be an interesting value play, but it's not really competitive to Amazon. They're not on the same level. Google could also be one of these with efficiencies of scale. They're the market leader in search. They're collecting a vast amount of data. So disruptive technologies could be a risk to these large companies. With disruptive technologies, they don't compete on the same level as these companies. They try to create a brand new market. So that's just something to watch out for. Bigger is not always better when it comes to business. Number 4 is the network effect. So the larger the network, the more valuable the network is. So feel free to give this video a big thumbs up and feel free to subscribe if you haven't subscribed already to build this network of investors on this channel. So basically a great example of this could be Facebook. So Facebook has a vast network of people using the site, uploading content. YouTube's another example. Everybody's uploading content, everybody's watching, everybody's engaged on this channel. This gives companies a competitive advantage. This is why many smaller growth companies aim for fast growth during the early stages of the company in order to scale as fast as possible. Famous quote here by Mark Zuckerberg: move fast and break things. Unless you are breaking stuff, you're not moving fast enough. So that's how Facebook developed. Okay, competitive advantage number 5 is cost advantage. So this could be economies of scale, as mentioned, more efficient manufacturing processes, Tesla's Gigapress, lower labor costs if they're in a country with lower labor costs, an area with low labor costs. Taiwan Semiconductor could be an example of this. Coming in at number 6 is high switching costs. Now, this is a really interesting one. So let's say a company has been trained up on a certain software, or they've paid a lot for a certain software or a certain service, or to use a certain company's products. They've paid a lot. Then to change to a competitor, that can be high switching costs. Thus, they're most likely reluctant to change. Examples of this could be Autodesk. So this is an engineering software. I personally used to be an electrical design engineer. We used to use this software, and so did all the other companies. It's basically for designing, engineering 3D models, but I used to use it for electrical cable routing. Standard in the industry, we all had to go through a course using the software. Everybody used the software. Everyone's used to using the software in the company. Thus, for us to change to a competitor software, it'd be a very strange thing to do. It'd probably decrease the efficiency of the business. So most likely we'll just stick with the software, even if the company decided to increase the prices. So that is the power of high switching costs. Another example of that could be Salesforce potentially. So Salesforce has various different aspects of the business. It's a software business. So if a company's using Salesforce, will they switch to a competitor? Maybe, maybe not. They also acquired Slack, so that's another, helps to widen their moat. Another example of this, and this is a major one, is elevator and escalator companies. So this is a little bit like daylight robbery. So elevator and escalator companies, example here, Schindler, don't sue me Schindler. This is a Swiss company. So companies purchase an expensive maintenance contract which traps the customer in for years, and it's just the nature of the business. Elevator repairs cost an average additional 30 to 40% of what you already paid for elevator maintenance. So for example, a courthouse in West Virginia spends $1,000 per month on elevator maintenance, paid $21,000 per year for elevator repair. The repair cost them an additional 35% of what they pay over the period of time. Now, it says here, Schindler is your first choice. I think it's your only choice, especially when it comes to maintenance. But personally, I'd prefer to take the stairs. But definitely an interesting company to look for. These type of companies that have this high switching costs, these strong competitive advantages. So the next one is quite a unique aspect, and I think this is quite a unique angle I've taken on competitive advantages, and that is number 7, and that's founders and management of the company. Now, bear in mind, this is only management with skin in the game. That's those with a large portion of shares in the company. So they won't just switch to another company very easily because they have a lot of shares in the existing company. So people can inspire and do powerful things. Steve Jobs, Bill Gates, Jeff Bezos, Elon Musk, would those companies have been where they are today without these people leading those companies? I don't think so. I think people like Jeff Bezos are incredible. The way they've been so committed to that company over so many years. Bill Gates, Elon Musk, Zuckerberg, Steve Jobs, they're so committed, so driven, so inspiring, and I think that's helped many of these companies become majorly successful. Also, a side note for this, if they're inspiring their employees, if they're on the ground floor, in the trenches with their employees, it's inspiring their employees, it's inspiring more and better talent to join that company, which could compound over time into another competitive advantage. Next is the high cost of capital to enter. So this is number 8. This is a really sort of obvious one for competitive advantages. This is one of Warren Buffett's favorites. For example, Warren Buffett invested into a railroad company because if you want to build a railroad next to another railroad, you'd be crazy to do that because it just costs so much, it takes so much time, so most people just don't bother, and that is a competitive advantage. For example, Warren Buffett invested in the Burlington Northern Santa Fe Line, BNSF. This moved each ton of freight. It carried a record of 500 miles on a single gallon of diesel fuel. That's 3 times more fuel efficient than trucking is, which means our railroad owns an important advantage in operating costs. Concurrently, our country gains because of reduced greenhouse gases and a much smaller need for imported oil. When traffic travels by rail, society benefits. So that's a unique thing about the railroad business. But there are some risks for this. Sorry, Mr. Buffett. There are some major risks for the railroad business in the long term, not really in the short term. And that's disruption. So autonomous vehicles, Tesla, Waymo. If you have autonomous trucks on the road delivering freight, that could potentially be more cost effective in the long term than railroads in the long term and not in the short term. Air taxis, e-hang, Jobby Aviation, Hyperloop for transferring people around. So Virgin's working on this, Boring Company by Elon Musk. They're all working on these different aspects. SpaceX, space company, building, developing those type of technologies is extremely expensive. I think I heard a quote about how does a billionaire become a millionaire, basically start a space company. And SpaceX at the moment has the lowest cost of satellite deployment. Plan to potentially do a Starlink IPO very soon. So that's something to watch out for on this channel. I actually covered 4 potential ways to invest into SpaceX before the company goes public. And if the company never even goes public, you can still invest into SpaceX. So let's do a quick summary. Strong brand, patents, efficient scale, network effect, unique cost advantages, high switching costs, founders management, high cost of capital to enter. So these are 8 things that we need to look for when analyzing any company. If you can spot a company with 1 of these or 2 of these or 5 of these or all 8 of these, then that's a great thing to see. And that could really help to be the type of investment that you can load up the truck on. So if you guys found value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do want to access exactly which stocks I'm buying, which stocks I'm selling, and my entire investment portfolio, then feel free to join the thriving and exceptional community. The best people on this planet are in this group right now, the VIP membership group. So feel free to check that out. Find out more details by clicking the link below, and you can watch a video which explains all the different tiers and packages to you. With that being said, I hope you guys have a tremendous day. I hope you all do extremely well, and I'll see you all in my next video. Invest safe.